Hello everyone, we the group 5 of Financial Fluency of the Fall 2025 presenting our final project on Verizon Financial Fluency Analysis of 2020 to 2024. Verizon Company is one of the leading telecommunication companies in the United States, providing wireless, broadband, and enterprise network services founded in 2000 through the mergers of Bell, Atlantic, and ZTE. Here in 2020, Verizon navigated a challenging economic environment due to the COVID-19 pandemic, maintaining stable revenue of $128 billion. In 2021, revenue grew to approximately 133 billion, driven by increased postpaid wireless subscribers and enterprise services. In 2022, revenue reached $136.8 billion. That is the revenue which has reached to the limit, reflecting uh, steady wireless and broadband growth. In 2023, revenue slightly decreased to $134 billion, impacted by intense competition and higher interest expense. And 2024, Verizon focuses on monetizing 5G, expanding enterprise solution, and maintaining financial discipline. Verizon had a heavy investment in 5G and broadband infrastructure, focused on premium postpaid wireless customer and enterprise services, operational efficiency, and cost management. The common size and horizontal analysis that shows income statement revenue has been relatively stable from 128 to 137 billion dollars, and we have the balance sheet's total assets have increased over the 5 years period from 316 to 380 billion dollars due to network investment. Horizontal trends, we can see that revenue and net income growth are modest, while total assets and debt have grown steadily. We can see the liquidity and efficiency in the financial ratio 2020-2024. That current ratio 0.8 to 0.9. Day sales in accounts receivable 30 to 35 days. Day sales in inventory 10 to 12 days. Total assets turnover 0.35 to 0.38. The leverage shows total debt ratio 0.55 to 0.60. Time interest earned 5 to 6 days. And here we can say that Verizon's ratio shows a capital intensive business with high leverage but sufficient interest coverage and free cash flow. The capital structure 2024 estimate the market value of equity $130 billion. That is the value of equity. The value of debt that is in the market, that is $175 billion. And here again we can say that Verizon's WACC reflects a very high proportion of debt in the capital structure and the low cost of debt relative to equity. And the strategic recommendation of Verizon's are: number one, debt management. Consider gradually reducing long-term debt to lower interest expense and improve financial flexibility. Number two, invest in high return project. Focus on monetizing 5G, fixed broadband expansion and enterprise solution that provide higher margin and stable cash flow. And finally, the operational efficiency, we can see continued cost management initiatives to maintain margin despite competitive pressure. And in conclusion, over the past 5 years, Verizon had balanced heavy infrastructure investment with a stable revenue base and disciplined capital management. The company's high leverage and capital-intensive operation offset by strong free cash flow and reliable dividends, that is payment, To maximize shareholders' value, Verizon should continue investing in high return network projects, manage them prudently, and focus on strategic diversification in enterprise and digital services. Thank you.